Hello, everyone. Welcome to the stream and welcome to, should we call it Bloodbath Thursday? Unfortunately, the market's down for some people. I guess that may be a surprise for us here. I guess it was now or never, yeah. So the market has turned and it's not looking too positive. And I think probably most people can probably see this when you look at it on any chart. If you're actually looking at the futures, doesn't look too good. And here are some of the reasons why. But firstly, welcome everyone to the close. Obviously, thank you so much for joining the stream. If you do enjoy our content, remember to subscribe, smash that like button straight away. It does help us out. And we'll move to the next kind of index and stock discussion. So let's talk about here the rejection off the point. Now, this is the point of no return really for the bears. They had to win it here. They look like they've done so. Regardless of the news, this was most likely the area that it was going to happen in. Now, if you're looking at the futures, you would think, oh, this looks like kind of like a hanging man style candle. And then we've got this big rejection candle from it. Here's where things get kind of interesting. If you think about it, what's the next step for the NAS? So we kind of expect it to close around this level. I mean, it may go lower, but this would make sense. And we'll talk about that in a minute. Is it actually to go to the low? Or is it actually to break and continue on? So let's now understand the SPX. So here's the SPX. Initial fall off, double top, rejection at the roll reversal, support becomes resistance. Big candle. Kind of unlikely if we close down here. And that's a, I guess an if, because we have 22 minutes to go. If it closes down here, it's kind of unlikely that this doesn't try to not only go down to this level, but also probably try to break and dip lower before moving away. Now, that's just the general philosophy of, I guess, how markets usually work with this. I mean, you've got to think about this as being a huge run, a double top. What's a double top really in trend telling you? It's telling you further weaknesses there, the roll reversal. And if you can't hold this, as soon as you break lower than this, yes, okay, we go down to 4,300, 4,250. You'd almost think that's very, very sure. But does it hold? This sequence is not exactly looking too fantastic for that. Luke Wild, New Zealand, $2. Great day for gold. Certainly has been. Yes. Finally, gold has come back to being some resemblance of trading in the last couple of weeks. But look, you can't expect that much. People will say, look, oh, gold's only moved 1.5%. For gold traders, 1.5% is a lot. Don't worry about that. Because you usually trade a little bit leverage. So there you go. Drew Hanish says, today bad news is bad news. Yes, nowadays it is. And I read an interesting article. And that interesting article basically paved a way. It was written by one of the big banks. And it basically said this, to summarize, that there's so many problems that the Fed has. One of the only solutions to the Fed's problem is to create volatility and therefore effectively sack or reduce equity prices. Okay, so equity prices and also stagnate property prices. So the whole point of them being able to get out of this problem is to create volatility. And it's a very interesting article in some ways. I tend to agree with it because there was no other way out. Basically, the other ways out suck. I mean, yes, we want to increase the interest rate. We're going to try to do it that way, but that's not really going to solve it. What the Fed need to do is then to kind of kill sentiment. And one of the best ways to do that is to create volatility and lower the equity prices and property prices, or at least stagnate property prices and lower equity prices. And that they don't believe that there's any problem with them lowering equity prices 20 to even 30%. Now, I'm not saying go 30% because I don't think we do, but they don't think there's a problem with going down like this. There's no systemic risks, they believe, to the US economy. So it's an interesting concept. And it would technically deal with many problems that the Fed has. because if you create fear to a degree, you can get rid of some of the problems. And remember, their main goal is to actually get jobs back in the green, which has technically happened. So it's an interesting one. What can happen with property and equity prices is if you have wages going up, equity prices going down, and on top of that, you've also got employment improving, then this can be offset by these. It's an interesting article. Just an interesting thought there. Anyway, RMN, $4.99. Hey, Tom, Roku earnings is coming up. What do you think? We'll check it out in a second. So what do you guys think about that? Do you agree, or do you think that that is not? I mean, I could read the whole article. It makes a lot more sense than that one. But the point is, do you agree that that is the only way out for the Fed to create volatility, even though that's not really what they're meant to be doing? Or do you think that most likely that is not the best course of action? I feel like it is the best course of action. And if you can do it, it's really a very good way out. So S&P 500, let's now break it down to the 1 hour. Let's talk about this support. So, of course, where do we close? We're closing on the body support. There probably will be a little bounce off here if we end up closing around this level. You can already see small little bounce here at the close of the day. If we bust underneath this zone, well, there we go, 4,300, 4,250. And this week's been so lame and annoying for many bears. And many bears probably been frustrated, maybe even scared and closing their positions, that, you know, getting back down here isn't really going to do much to the options market. Remember, we've discussed the options market in quite a bit of depth. And the real strike they're not wanting to go under this week is 425. So come Friday expiration, you don't want to go under 425 for Wall Street, and they would rather sit above that kind of 430. And some people would say, but Tom, max pain's like 448 or something. Yeah, I understand max pain might be there, but not every week is max pain. Yeah, max pain is a concept that's a cool idea, but it doesn't always work. I mean, if it always worked, that would be really easy. What I prefer to do, and I've always said this, is to look for the big strike itself. And if you see a huge level, you use that one instead, just as a bit of an idea of what is your best case scenario this week. And that can actually help you also place options, because sometimes when you buy a put, it's so expensive at a certain price. And if you don't expect it to be able to get under this price, then maybe you shouldn't buy that put. Maybe you shouldn't buy that put. So we're going to close right on the support. Once we get underneath this and breach in the next session, expect a bit of a bloodbath to go down. 430 probably being the first stop. And I would expect some buying pressure to come back off here. Even though it looks ridiculous, this is kind of where I expect some buying pressure to potentially come back in. US 100, let's look at the QQQ or Nasdaq. Into the close, it's the exact same thing. Weakness and obviously support here. Let's see what you guys think about that. Sell Bitcoin, buy gold, silver and gold. Roku is dead. Roku certainly under some fire. We'll check that out in a second though, don't worry. John B says, Fed doesn't control the supply side of the economy. It influences demand. There you go. Monica agrees. And Amin says, evil Fed. Yeah. Chris has got a bit of a contrarian way of looking at things. Yeah. And Gary Sonny says, I think 420.80 holds. We have way too many puts from now until quad witching, especially at the 425 each week. Yeah. I mean, eventually you can break through, but if you can expand, you've got to think about not every put is obviously retail traders or anything like that. If you can get a bit done and expire a bit, you still end up making a lot of money and you can let it through. Remember, most of these puts that were put in by retail have been done so over the last 3 weeks. They put them in maybe 24th of January. Everyone was freaking out. Over here, the puts were extreme from retail. We got a big dead cat bounce. Now it would be less extreme than it was over here. So it's actually more, they made huge money off that, letting those things not go underneath. So, okay, well, basically with the indices, we know both are at support. There's not much else to really discuss about that today. We know we're here. We know if we breach underneath 14,000 for the Nasdaq becomes the next level. It's not going to do that, it seems, right now. So let's go through some of the facts. Well, you would think, oh, but what's happened here? Is it the 2-year yield? Is it those types of things? It's not really the 2-year yield that's doing anything, because you look at this and you'd say, well, it's coming down. That's a good thing, yeah. And yes, it certainly is. It's one of those things where it's coming down. Most of this stuff is all about the, let's call it, tensions in Europe. But I think it was going to do so anyway. Regardless of tensions in the Europe, you're probably going to see this thing turn over. So here's the 2-year. And if we actually put a little trend line on it, we haven't really even come back down to earth from this one down here. And from this one here, you're right on that. You're not even down to that level yet. So I don't even think it's turned around enough to get super bullish on it. Same with the 10-year. They're both dropping at the same time, which is probably good news for the longer term bull holders. Eventually, this market will turn around. It could even be here. You never know, but probably a little bit lower now. And when it does, having these coming down is really pretty much an overall positive. Got to remember that. All right, let's go through some of the stocks. Now, is there any stock here other than Roku that's looking good? There's a lot that got belted. Now, we were correct on Nvidia, so well done, everybody. Unfortunately, this had a great result. It beat expectations and everything was great, but it came down to one thing, and that is the price was just not cool. The price was not cool. I suspected it. I did really talk to you guys about risk management on it because it was pretty uncool, and it's dropped 7.37% after the earnings. Now, this is after what you would like. I listened to the call. I know a bit about this company, and I would say that everything's looking great for them. And this is a high growth, decent quality company that's really good quality company that's doing great. But problem is the valuation was so high. And unfortunately, I can also say that I kind of feel like, especially if it gets underneath here, being the price of 238, this thing is probably going lower. And we go all the way back down to that 200. So for some people that are looking at Nvidia, they might be saying, oh, I wonder if I can buy into this one. Well, the good news for you is if the index ends up going lower, that is the Nasdaq, it's going to pull semiconductors down because they're highly priced. And you're going to get your 220 in only potentially a few days. You just need the Nas to make a new low and push this one through. All right, Roku, here we go. So Roku is looking absolutely terrifying into earnings. I mean, is there not another way to look at this? We've had it in, I've put it in the accumulation base area because it was accumulating. We're at a support ahead of earnings. The market obviously is going negative into earnings. Now, we've seen quite a few times where the market's gone negative into earnings, the result to surprise to the upside in these hyper stocks. And if we go back through history of Roku, let's think about some of the earnings here. What's happened so far? So here we have an earnings, it went bad. Okay, that was not good. Here we have an earnings, it went bad. Okay, that wasn't good. Here we have an earnings, flat. Here we have an earnings, it went bad. So the track record here since pretty much 21, so Feb 21, it's been bad. It's been really, really, really bad. And the market is predicting it's not getting any better because suddenly fundamentals matter. Fundamentals never mattered before. Remember 2020? What's fundamentals? What's 2021? What the hell is earnings? It doesn't even count. Earnings isn't a thing. And now suddenly it is. So look, would I buy this into, this? I think you're basically gambling unless you understand something about the company. You've done some social arb. Social arb is a way of going into earnings and understanding an X factor could be there, but the price action's not good. And you can see it. You go to a weekly, it doesn't look good. Someone said Wall Street are killing the close. Are they? Let's have a look over here. You making me look, or are you actually killing the close? Okay, so it's a little bit down. Definitely negative, but not fully through. 3% down on the NAS now. So it's a bit of a bloodbath. Welcome to the 1,000 people joining us. I mean, it looks terrible. Everyone's probably still freaking out. I don't know what we didn't expect. That's the thing. You know, if you, I don't want socks. If we didn't expect some kind of fall, I'm not sure, you know, what we were really technically trading here. I mean, obviously, I've been leaning towards this negativity because I think it's difficult for, as I said, I think it's difficult for the Fed to get out of the situation without getting the market down. I think if you're getting these big central banks, or not central banks, but big brokerage houses sending out these kind of notes to their private equity companies or country or private equity clients, they're kind of thinking, you know, there's more in store. And while we're positive into the market come later this year, very positive, by the way, I'm feeling incredibly good about the long term, medium term for the markets. This is the type of volatility that comes in between. Durgesh says ASX 200 TA, please. We'll do that after the market closes, Durgesh. So I'll remind me, but I will bring that up a little bit later on. So yeah, it looks really bad, and I understand no one likes this type of thing, but it's probably going to be the way it is for some time. 2022 is not going to be an easy year of navigation if you're just investing and hoping for great gains, and that's it. So here we go. We're going to actually close underneath all the previous lows coming into the close. It looks like down 3% in the NAS, down 2% on the Dow. And how's our IWM looking? So that's down 2.62%. Look at this. Ooh. From the last two lows, IWM is basically breaking below. And that brings in the final leg of our discussion. So obviously we have leg one, leg two. Do we get leg three? Leg three is very negative towards the market. And the concept here is really that each one of these pullbacks has been similar in length. So here's a pullback, here's a pullback. They've basically been the same. So we've got range one, range two, pullbacks equal. Obviously, this is, I call it legs. Some people call it waves, whatever you want to call it. Doesn't really matter. The general concept is it's moving in a sequence, coming off the giant Wyckoff distribution. And all of a sudden, we're going down to what, a 180, 170. Now, I will say, third leg's down, go 80% of your expectation. Don't usually go for 100%. When you're looking for that last final leg, it doesn't do this very often. It usually does this. So that would probably point more towards a 180. And as we scroll out, it doesn't really connect with anything in particular, but I do think that that is the most likely kind of scenario. Some people, the 170, if you look, predicts the previous peaks perfectly on the Russell 2000. So if we can stop, if we end up going lower here, this might be a key to the market, which always has been a bit of a, you know, showing the strength of it. Just from a bear side, this is obviously just the bear side, one of the worst case bear sides. Somewhere around here probably would be the low. And that would put in exactly what the Fed needs in the market. This is the bear case, the worst bear case that we're really seeing. Don't be scared by it. It's just something I was thinking I'd bring up. US 100 now slightly recovering. Negativity on the weekly, if it closes like this, would be quite severe. Triple wick rejections on the way down the futures. And the reason we could be bearish this week on the SPX was only because we very rarely see these double rejections. And if it closes like this, yeah, get ready, because there are going to be further shorters coming in. Remember, weekly is also about weekly. The only really important thing on the weekly is going to be the weekly 50. If you breach the weekly 50, It's rare. It doesn't happen often in bull trends. And it tends to be a slower form of recovery afterwards that can take some time. So if it gets underneath here, we have to look for a pattern. We have to look for a lightning bolt. We have to look for some really significant turnaround story. So 50 exponential, a lot comes down to that. And that's sitting this week on 43, 42. So we'll find out whether that breaks. But at this stage, you can see that negativity in the market. Some people saying they love it because they're getting value, they're getting cheaper price and they want cheaper price. Yeah. I mean, this is basically on sale and it might be continuous on sale. And if you have a longer term vision, if you have the vision, these types of levels or these types of zones and sell-offs, that when they get down to that kind of 15% plus in markets, are actually very smiley face if you have the vision on your investments. So that's why I don't freak out when I consider ourselves in a new 7-year cycle. It's mid that cycle or early stages still. All right, let's scroll through everything here. We've got some questions coming in about some individual stocks. What was the one I saw then? Yeah, Tesla. We'll look at that in just a second. Well, actually, let's look at Tesla coming into the close. So 5.1%, 876. Let's go to the 1 hour here for it. So it kind of sold off in the middle range, which is a bit disappointing. I mean, it didn't really do anything. Tesla's been lackluster. Now, somebody brought up a point here and they said, Tom, I think you're missing the longer term Wyckoff concept here, which was basically this. I'm not sure if I'd call it a Wyckoff because it doesn't really have, unless you think that's your max pain, because you've got this random break to the downside as well. But that's what they're thinking. Anyway, let's have a look at the most likely here. And I've detailed a few times that Tesla might weaken here, but then come in very strong. So remember what I shared. Did I share? I think I shared it in yesterday's video. This is the season axe. So the season axe for every single year, and this is that March actually ends up being weak for Tesla. But look at the mid-year. Oh my goodness. And that's phenomenal. That goes through a lot. I pulled that stat for a while. The mid-year for Tesla is really, really, really good. So we're breaking down. I guess we're underneath 880 now into the close. Not really positive signs here for it. It just shows you that if you want to look for recovery in the future, this 20 exponential moving average has held Tesla down incredibly hard. And that is going to be one of the biggest signs for the recovery in the future, just to say, okay, yes, this is a big significant change. It doesn't look good on this chart. I'm not going to say it does. Weekly also is starting to look pretty poor. If you get underneath here on a weekly, let's say this closes tomorrow underneath the 850, expect 800 relatively quickly. 850 is your next level of support here for Tesla traders. If it can't hold, yeah, not good. So we just closed then. Market does close 2.9% down on US 100. That's the NAS. S&P 2% and US 30 1.81. If we keep scrolling through all these stocks, I mean, it's just, you can pick whichever one. It doesn't matter which one we really look at. They're all getting beaten. So, and they're all going back down to, much, much lower prices at this point. Microsoft's a bit of a telltale sign. This is the first time we're getting through our beautiful trend line that we've been following now for a while. Remember, we rejected this quickly after the earnings. This is actually a sustained sell-off again. One of the big stocks showing us things aren't all peachy here on the weekly. Let's look at Apple as well. Apple double top. Now, this stock has been ridiculously strong. Like, I mean, I don't even know. Is this a hedge to the market or something? It's so strong. It still looks weak. I mean, little double top rejection off this area. But, God, it is either every retailer in the world is buying this for some unknown. Is anyone buying Apple at this price, by the way, in the chat? Thanks very much, Monica. Appreciate that. 1,000 in the chat, 200 likes. If we get the likes up, it would help us out. How many people are buying Apple at this price? I mean, I think it's really expensive. Great company, expensive price. Kind of like the Nvidia discussion we had. Now, where's ARK-K? Let's go to ARK-K. All right. So RK never recovered. It's why we always say wait for the recovery. We've been following this on the channel. We will have it in today's video again. Daily 20 moving average continues to hold it down. Rejection. It's here. Support. Obviously support down here at 60. What is this? 64.90, $65 price range. Volume dropping a little bit, but still significantly high, showing that there are purchases here. Look, this fund is forming still a nice accumulation base. Imagine if we come down like this, 20 moving average, break through it, and the trend line, that's a tick. That's the first entry. And then we end up going through this. There you're in. You get a nice double bottom. There's a lot of runway still. $90 is the next target. So percentage-wise, there's amazing returns here. This candle doesn't really present anything good. And it doesn't matter which stock we look at. I wonder what Roku will end up doing here. Post-market up 2.53. So will it do what every other hyper stock's done and end up doing a return that's better than the expectation? Remember, it's on support, but it came in really bad. But yeah, all these stocks are going to be doing the same things. Like you look at, it doesn't really matter which one. I mean, Twilio, it's on support here. Obviously, the big earnings, big bounce. God, that's painful. That switch is painful. Let me just look at that. Ouch, 27%. So to get back to this level again from the other day, 36.71%. I mean, these are almost unheard of numbers. When you think about the .com bust, for some people that bought up here, they have just experienced the .com bust on many quality stocks. That's crazy when you think about it. But that's what many retail traders have just gone through. Gary Saini, $10. Thank you very much, Gary. Assuming we crack the 50-week, likely scenarios fall straight to 4K. Rebounds, test to 4280, not closing above the monthly 20, and then 3800, or fall, retest 4280, then 3800. Thoughts? So yeah, if we get underneath the 50-week and close, the most likely scenario is then 4,000. You are correct. And then I would say between 4,000 and 3,800. If the Fed are trying to do what many people obviously out there are starting to suspect they're trying to do, that would actually be a perfect case for them to push equities down to that 3,800, 4,000 on the SPY, reset the market a little bit, allow it to turn around, as in allow it to grow back up, which will be fine and be really, really good. So yeah, I think that makes a lot of sense. Basically pushing towards that 20% down market. That's what we could be seeing here in the US on the SPY. So that is pushing towards what most people consider a bearish market, which is around 20%. That would be right here, 3,800, 4,000. That's the worst bear case scenario. Some people I know that are fairly smart are calling 30 to 50%. I find that very hard to stomach, that's going to be the thing. I just don't think so. My more likely scenario is in here. And then rebound if we go underneath this low. And at this stage, we're just following the price action. Look, it's great to have opinions, everyone, but really it's just our opinions. We can only follow what the price is telling us. And if you've been trading this effectively, you would have liked the 50 exponential moving average. We always said that would bounce. It did on the weekly. We great balanced. We got great kind of base here. We followed it up, followed it down, roll reversal. Day traders love that. And then even here, if you had the guts and you're getting the glory on the bear move today, because it's not like we didn't really talk about this roll reversal. And today, coming into the market, we had the capability of you to be able to actually spot when it went through. So what I mean by this is, and a few people in the public chat room got this, by the way. So I posted this on Twitter, this support. And if you don't believe me, let me have a look over here. There it is. So there's the support I posted. And this support here plus this low, both of these, as they go through, as it goes through the support and as it goes through this low, you're basically scaling shorts, because this is the support that was really being held. And it got better because during the session, Where are we? During the session, we ended up getting this, which quite a few people in the public Discord room, by the way, click the link in the description below if you're not part of it. Join the community. It's going to be good. I'll get one of the mods to create an invite. Chuck it in. I'll chuck it in. There you go. So you can definitely come join us. Yeah, when they created this, they basically trapped the market within effectively a nice little triangle here. And when it went through, bam, there's the short capability. And you can tell they were right. Everyone was right, because if you actually draw that to the lows, guess what? Sold off, retest, bam, straight down. So it's fairly easy day trade. Follow the price action as much as possible. Be nimble, be quick. The VIX is 28. It's not cheap. So Gary, thank you very much for $10. That's the way that I look at it. No one's buying Apple, by the way. They all say it's too expensive. I agree with you. I don't understand it. It's madness. Chamdy Shop, $4.99. Is it time to buy the Ethereum dip or wait? If wait, how much or how long till the next support level? Yeah, so I feel pretty bad about the crypto markets right now. So we'll do ASX in a second, then we'll do the crypto market. Don't worry, Durgesh, I haven't forgotten. But it's not going to change really what we're doing on the ASX isn't open. So it's not really what I would say is scary at this stage. All right, let's just quickly do this, and then we'll go back into the US market, commodities, crypto discussion, and indices. So ASX rejecting the same resistance zone. It's not safe from a sell-off in the US, but as we've always said, this is not a broad-based sell-off. This is a sell-off that is hitting growth stocks. What does the Australian boomer market have? Not many of those kind of growth stocks. It's mostly banks. It's mostly energy. It's mostly iron ore. Commodities, as we've seen, especially some things like gold, are doing quite well. So it's not affecting this market so much, but this is still a top. Here's the double top area if you're worried about the Australian market. And basically, if we get underneath this zone here, so here's our resistance, we get underneath this support, all of a sudden, bam, down we go again, because that is going to be the same point as the US market will tip over, and it will bring everything with it. So I would say big support here for the Australian market is 71.50. And it looks kind of double toppy at the moment. And this is using the futures market, so it should be live to the current price. Yeah. Let's quickly go through Bitcoin here just after the close. Not a good signal, guys. That is bad. That is a very bad close. And in fact, it's kind of pointing towards more negativity. So the 46,000, we know that's where the big FUD would have disappeared if it was able to get through. It's rejected that level, come down, retested, rejected again. Put it in perspective of a weekly, it's now lower. I mean, does any technical analyst come in and say, oh, I love that? Oh, yeah, that's awesome. That's a rejection candle followed by another rejection candle should it close. That's bad. When you see a pin bar like this or a rejection shooting star, if it closes above that, you can laugh all the way to the bank. But as it follows, especially if it just stops where it did and it was starting to go long. If it did, 46,000, I wasn't kidding. Not only would that have been an incredibly likely 52,000 trade, I think actually it would be the beginning of a nice thing for Bitcoin. This is bad. This is underneath a new low. It's got a rejection. If it gets another one of these candles and this holds up for the week, I mean, back down we go for BTC. And it's bringing the alts with it pretty hard. Like you look at the alts, they're all terrible. Ethereum included. It's the same thing, looking for that low. Buying the dip here, maybe fortune favors the brave, but it doesn't favor me. That's not the way I think about it. I don't know. Anyone buying crypto here? I mean, Ethereum is still holding the trend line down. It's got its first stage of recovery. But the Bitcoin looks damning to me, and I don't know what you can do about that. Thank you, Chamdy Shop. Appreciate it. Silver Miner says Nvidia to 180. Well, figuratively, that would probably bring us down to a much better ratio. I mean, not that you use PE ratio so much on Nvidia, but you should because the company is profitable. It's in growth, as we know, very nice growth. This reading here Still showing probably it's going to be a fairly high ratio even after the earnings. So I think the earnings, the PS ratio would be down more like here. If I was to pick up more Nvidia, I would love it from an investment perspective. I'd like it in that gap zone before. So basically a ratio between kind of 15 and 20 from the price to sales ratio. Look at the amazing growth. It is amazing growth. Great company. You can tell just even here. You don't need to look at many more metrics than that, really. You just go, oh my God, that's so good. But yeah, I want it in that price. And when you start to think about things like that, and then you go through some of these hyper stocks and you believe that they're still growing, relatively quickly, look at these things. Like here's Twilio. Nice, consistent growth pattern. Okay. Very nice. Okay. Price, the sales per share actually is improving. You want to look at more metrics than this. Here's the overvaluation. And here we're back to, guess what? Very much fairer prices, at least by this metric. And that's one of the metrics that you'll use when you're doing analysis. Beautiful. Fantastic. Much better. All right. Let's see the damage. Have we got the Roku earnings yet? Anyone got the call on this one? Edwin Permana says, if Nvidia goes to 221, I will buy to the death. Well, at least you have conviction, and that's important. Some of the best traders in the world or investors in the world, let's call them, they have conviction towards, let's say, 1 to 5 stocks. And they go, okay, well, if you buy 10 to 20 stocks in your portfolio, in some ways, would you be better off just buying baskets of sectors, or would you be better off buying the index because you're starting to get up there, especially if you hold the big ones? These are questions that some people don't ask themselves. They want to beat the index. That's the thing. But when you've got these high conviction stocks that you're investing in, that's a good number to have. And that's very much an outperformance number if you get it right. Some people just have everything in Tesla. Andrew Stansel says, everything in the market is way too overpriced and overvalued and needs 20% more correction. We talked about that before. Harry Ride says, Tom, I'm down 10K on the US 100, but it says expiry date March 22. Does that mean Forex will automatically take out 10K from my account? Oh, you're in a futures contract. I would highly suggest that you talk to your broker about this, man. Sorry to hear about it, Harry, but you do need to talk to your broker about the way that they run that contract, okay? It depends on the broker's contract. In general, you would get rolled, and that would be at the new roll price, and you need to just be careful there. So just contact them. They'll explain the situation, I hope. Yeah, so Bitcoin, not so good, unfortunately, there, everyone. I'm not feeling too super bullish with this closure should it occur very, very soon. Let's talk about something I have been bullish on the last, I guess you would say 2 months, but especially bullish on the last 2 weeks. And that is gold. And it's doing its thing. So gold is pulling out. And if you've been following this one, it's certainly pulling towards, you would think, that 1910 level. We breach through this. Where do we go next? You would think 1960. And people are making these deals and they're saying, oh, yeah, gold's a hedge against this, whatever, blah, blah, blah. Gold is good when you trade it and it's moving and it's got a good technical on it. Gold doesn't hold up against many metrics. And someone will say, oh, Tom, I've been stacking gold for 30 years. Look at me go. Great. But as you would know, if you've been stacking gold for 30 years, it has really big bursts where it runs for a little bit and then it sits there and does absolutely nothing for ages. And that can be incredibly frustrating for people because you will be falling behind for years and years and years and years and years. And then all of a sudden it comes out of nowhere and it does well. Anyone been holding gold and silver? Do you want to attest to that? Obviously, if you held gold and silver in the 70s, you're probably still underwater on silver, so you wouldn't be very happy. But here's the gold move. We get through 1870. We move towards 1910. We expect resistance at that point and most likely some consolidation, if not pullback. And then you've got to think, well, what's next for it? And if it does breach through this zone, the next zone is 1960. And then after that, it's probably flying. So yeah, it's doing good stuff. It's moving well. I would just trade it personally. That's the way I look at things. Trade to the level, just like we did for 1870. It was trade to the level, take profit. It pulls back. We talked about it in the video. Turns around. If you want to descale a portion here, leave the rest on. 1910 is the target. Descale the position, wait for breach. That's what you're doing here. You're kind of nimble and fast on gold rather than being slow and lazy. Jay Berg says, my gold hasn't done much, but I like holding it. Well, that's absolutely fine. And Edwin Permina says, I've been holding GLD for 25 years, and I admit it sucks. Yes. Unfortunately, it does, but it's pretty cool when you have those little like coins. And I'm sure I'm going to get a little bit of hate because I am following this a fair bit at the moment. But you got to just look at the charts. I mean, if you look at monthly and you understand the movements of this thing, you know, oftentimes you can get, and this isn't even going back that much, but it can sit, and it can sit for a while. Ooh, beautiful. You know, that was good. It was a nice run. And if you get the right run, it's good. But look at this. You know, it can sit for ages. Then it sits for the entire time. All of the Nasdaq's booming. You know, it can be incredibly frustrating. But when you recognize incredible breaches like you did here, which actually happened before, you've got to remember this all happened before the pandemic crisis. When yield curves inverted, people were starting to buy heavily into gold. Look at the breach. That was phenomenal. So are we seeing another breach that's going to be significant for it? I think that this could have legs. If it keeps going through, like it goes through 1910, 1960, we could be looking at all-time highs for gold. And that's the first time, because you've got so much consolidation here. This is the time when you start to say, okay, cool, we could be going to a new paradigm shift for gold in terms of it moving up. Salt Life 1717 says, leave gold. I love gold and silver, stack it and forget it and don't worry about it. Well, there was that guy in our room where he had like Bitcoin and I think close to 60,000. He had 2 Bitcoins. He sold it and then he just bought unbelievable amounts of silver and gold. So, and he just bought all silver and gold and then stacked it and left it in his room. He's loving it. That was pretty funny. Very cool. The Roku earnings are out. Okay, can someone just grab them for me? Let's have a look here. Oh, another through support. Oh, Cathie Wood's getting mutilated, which doesn't surprise me, but still, it's pretty brutal. I still don't understand this company. Someone must explain it to me one day why this was ever good. This is a company that I have often said I don't understand. 130 after the close. Obviously, earnings is out, down 10%. Hypergrowth continues to get belted. We are now at cheaper prices on this stock. Once the favored stock of many traders out there, not me, but many traders out there, and that is back at 19 prices. So you've got to ask yourself the question: is this an overpriced market anymore? And I would say, if you're looking at it from the medium to longer term, not as overpriced as people think. ND says, so that's why SR continues to rally. Yes. Nick Keller says, everyone I know has Roku, to be honest, but I have no Nvidia Shield, Nvidia Shield, Nvidia Shield, Nvidia Shield. But I have no idea how they make money after the initial buy. Yeah, I have no idea. Get out of here, stock. I should really remove it. Well, actually, yeah, I can remove it now. It's not an accumulation base. Get out. There we go. Sorry, Roku lovers. We had to remove the stock. Okay, that's what we had to do. And you can come and laugh at me later on when it comes back up and say, that's right. I was a believer. I'm not a believer. Here's the earnings. Thank you very much, John. Roku, fourth quarter net revenue, 865.3, estimated 893. Wow, so it missed. Nasty. No wonder it's down. They only just had to probably hit it and it would go up. Look at this one. Pause Zoom. How's Zoom looking now with its moat? And you know what I find funniest about this one is just how many of the big hedge funds were purchasing it here. If you go back and you look at all of the big investment funds, they were purchasing Zoom out of control at these prices. So it's amazing to see it back down at this price. I'm starting to look for base though on this one. I know that most people say, but yeah, Zoom has no moat or anything, but look at this daily 20. I said I was looking for base here, didn't see it. Still haven't seen it. And I'll continue because if I can get Zoom at 19 prices, I might stab some of these companies. But there's so much good quality that you don't have to go after these types of things. Certainly not there yet. Another one I just want to mention was the unfortunate demise of Pltr continuing down here. Back onto support. It had an earnings that I believe was okay, but the market doesn't like it, and it's bringing it all the way back down to an $11, $10 range. So very brutal here on something that's quite popular. Again, the price action is not showing us the way. And that's the story of every one of these stocks. Whether you want to admit it or not, there's just nothing here showing us beautiful. I want to buy it. It's so good. Everything looks so good. If it did, I'd be sitting here telling you, oh, yes, fantastic. Let's buy everything. And I'm sure at some point this year, it will hit levels where we'll go, yes, finally. I mean, we were pretty excited over here. Fair enough. But unfortunately, when you have such a huge decline, you often get the dead cat bounce. And we hopefully followed through on that kind of idea. It's still very quick and nimble. 50 exponential moving average on the weekly US 500 for anyone that's joining us for the first time will be the biggest thing. Godzilla says, I bought Nvidia at 260. Is it overvalued? Yes. That's why it's going down on good earnings results. Correct. It is unfortunately overvalued. Not by huge portions, but definitely is. Yeah. So again, if you wanted to look at it, we did it before. You can just scroll back and have a look through. So the story is Bitcoin doesn't look so good. Not looking so hot here on the old Bitcoins, unfortunately. It's moving down to 40,000. It's dropped another 600 since we were talking. Be careful, guys. I don't know where this thing stops exactly at this stage. Doesn't look good on the charts. Might be wrong. It stops right here, but I don't know. That weekly is compelling. And if the next weekly closes below, it's down. This is not got the same amount of user participation in it. And if you want to blame anything, if you're a crypto coin fan, if you want to blame, what would you blame if you're in crypto right now? So say you like coins, you like Bitcoin, Ethereum, Matic, ADA, Solana, even SHIB. Which type of crypto thing could you blame that's destroyed your coin value? There is literally one thing to blame here, coin holders. Which one? Let's see if anyone has big brain, understands that it's stupid when you segment a market because you end up getting all of your nice little hype train people. And they go into a liquid pitches, guys. I mean, it's getting out of hand. I'm getting spammed on I was on the Facebooks. I'm not even going to mention the name of the company. They don't deserve any love. Ridiculous crap. Just the ugliest looking thing I've ever seen in my life. Just hideous stuff. They're even going on movements now. So they're getting like popular movements in society, and then they're creating special pitches for them. Oh my goodness. NFTs killed. That's right. You guys know. NFTs. They destroyed the crypto market from the perspective of the coins anyway. You take away the hype, you put it in a liquidity, and when eventually NFTs, some of these projects are just ridiculous and they're going to lose so much money. And people half know when they go in them, they're going to lose so much money. But the problem is you buy it, and if you don't buy a liquid, good NFT that's good, and you buy a liquid piece of crap, then all of a sudden you go to try to sell it. Who's going to buy it? Nobody. At least with the coin, there's always lots and lots of buyers and a lot of liquidity. With this NFT, there's nothing. There's no people there. Some NFTs probably have the ability to be profitable long term. But what I'm seeing right now in that market, no. There's some trash. Absolute trash. Scary trash. So, yeah, the story of today is everything is down. Surprisingly, agriculture just continues to do incredibly well. Look at this. Look at agriculture. Would you even think that the market sold off right now? I mean, what is that? Is that that's the entire agriculture sector, 96.11. I'm sure many of you would rather be in this one. It's moved about 0.5% to 2%. Oh my goodness. So there you go. It's the markets within markets. Yeah. I was looking for the best one, and that's probably one of them. Let's just quickly look at GDX, Vanek Gold Miners. So it's actually at the resistance. Congrats anyone that did follow the gold this week. Let's just quickly look. If you'd just gotten into gold this week and gone bullish on gold miners, your percentage return will be 7.68%. Not bad week. Good work. Cool. And if you got the bottom, the 32, you'd make about 9%. So it shows you that sometimes being able to recognize the sector rotation is pretty damn good. Godzilla says, will the sell-off continue tomorrow given the war tensions and long weekends? Yeah, it's an hour by hour thing. I could see it continuing, but I feel like there's 3% down's fairly brutal. Do tend to see a little bit of relief coming into that. I don't know exactly. I'd be watching the price action of the futures. I mean, if the futures do this, and give you some form of base to work off, then there's a good chance that you get continuation sell-off. If the futures sell off harder and we end up opening down in this level, you've got to think that Wall Street will buy that coming into the Friday. Not much, but they'll buy it a little bit. So a lot of it depends on now the scenarios. And this is the problem. It's a fast market. You've got to be fast and you've got to be very nimble here on the way. If you're a shorter, you could hold continuously if you have absolute conviction. But in general, shorting is hard. Buying is easy. Darren Jones, $10. Thank you very much, Darren. Tom, on the US 100 one day, there is a trend line that connects the two supports at roughly 365. Okay. In Q4 2021 with the two tops and the bottom top from last week. Okay. So US 100 daily. $365. So you want QQQ is what you mean, I think. So QQQ. Trend line that connects the two supports at roughly 365. So you're saying right here. I don't understand. Two supports. I assume you mean these as well. Support has turned into resistance. Is this something that's already happened? Are you talking about like this? And for me, it would be that. Or something like that. Like through those peaks. Anyway, either way, this is where trend lines get into it. Thank you very much, Darren. I appreciate it. You can send me an image in Discord if you'd like, and I'll have a look at it and give you a message back. He says US 100, but then he says 365. I think he means further back in time. Ah, okay. Just send me an image, man, and I'll share it right now if you have it. This is correct, no blue. My annoyance with NFTs is more that you end up creating, if you're in it, cool. But if you are also in crypto, you've got to understand that everybody runs away and they all go into these random illiquid things and blow all their cash in them. And then all of a sudden they can't get out. And that effectively ends up taking away all the money and all the hype from your crypto. Yeah, just send it to me in Discord, bro. Thank you very much. Appreciate that, Darren. Appreciate it. As always, thank you very much for the support. Edwin says, hey, Tom, long weekend. Are there seasonalities that make markets go up into long weekends? Often they do, yes, but not this one that's coming up. It's not historically crazy or anything like that. Usually it's the Thanksgiving one that gets better. Look, I guess we'll leave it there. I'll make a video about all of these markets today, and we'll talk about all of the key levels and everything that we're seeing. The story, I guess, is, look, you can panic and you can freak out and you can say, oh, wow, I have no plan, or you can have a plan. What companies are you going to buy at cheaper rates? What's your time horizon? Is it 2 months? Is it 1 week? You've got to think about that as well. Is it 2 years, 4 years? If it's 4 years, it's totally different. Here's kind of what some people will be looking at as well. Some people will be looking through these lows here and they'll be like, okay, cool. We're at our final step of support. You know, when you kind of draw it like this perfectly, and this problem with trend lines, you'll be like, yes, we're here. I expect the bounce. So the futures market will be a lie. Whatever it ends up doing will probably lead into actually a more compelling story for the session. Gold remains pretty good. US oil is spiking slightly off the news, but I still think is bad. And I'll just quickly leave you with this. If you're looking at these candles and this goes to a new low, does oil look good? I don't think so. And this happens at the exact time where you see big investment houses. Oil's going to 150. Yeah, maybe, but not just yet. So, yeah, that's one of the big things there. Do you believe in death crosses and stuff like that? Not really. I don't follow them as being as accurate as everyone says. Like, oh, they've got cool names, but death crosses, golden crosses, all these types of things. I prefer just the price action. I have the moving averages to detail things, but really it's the price action and understanding the left-hand side that's key, at least how I see the markets. All right, everyone, we'll leave you at that. Thank you so much for joining us. Remember, all these stocks, they're all doing very similar things, and that's why you've got to focus on the indices right now. Focus on the sector as well. If you're trading a stock that's particularly in a sector, that can help you. And we hope you enjoyed today's session. Thank you for over 1,000 people joining us. It looks like the world is exploding, but at the same time, the opportunity is beckoning if you know where to look. So we'll keep covering it, and we'll keep doing that. Darren Jones, $10 here at the end. Thank you very much, Darren. My apologies. It's roughly 385, not 365. The 2 dips to 385 in Q4 2021 was support. Now that trend line acts as resistance, and we can see it because the double top last week. We're talking about the QQQ. $385. So you've got like this will act as resistance in the future. But I still would like to see what you're saying. Just send it to me and I'll have a full look at it, man. You're always a great supporter, Darren. So just feel free to send it to me in Discord and I'll check it out and I'll let you know my opinions on it and whether it's cool. So yeah, forward it off to FXE Tom in Discord. Anyone else that wants to join Discord, you can do so. And also click the get the free 3 trading cheat sheets. You might as well do it. It's free anyway. So that's on the link above. We've got a video coming out in a few hours, probably about 3-4 hours from now. So make sure to check out that. And I'll go and have a look and assess this market, because in general, it's always opportunity beckoning. So now next time, even I've got to go and have a quick look here. Thanks, Darren. Thanks, everybody. And appreciate the super chats today, guys. And also, I hope you did all right. And if you've been in gold, congrats to you. And if you've been in something that's not doing so well, that's all right. There's always another opportunity. Catch you guys. Bye. Silver, just message me. I don't know why that is. So just message me in, I don't know, just send it to Thomas, THOMAS, at fxevolution.com, and I'll fix you up. Catch you, mate.